Hey, it's your boy, Sean McLaughlin at Options Sean on the old Twitter X. Today is Thursday, January 29, 2025. How you doing? This is the All-Star Options Jam session. Hope you guys are doing well. If you're a subscriber to All-Star Options, I suspect you might be doing pretty well, but we'll get to that in a second. We haven't done the show in 2 weeks. Last week, I was traveling back from Miami, met the whole All-Star Charts team in Miami for our what do you, it's not quarterly, it's every 4 months. What do you call that? Trimesterly, our trimesterly portfolio accelerator event that we have with some clients. And it was a great event, shared a lot of great ideas. Some of those ideas have turned into trades for me and for you. But hey, if you're new here, first time, this is All-Star Options Jam Session. What we do here is we review action in the All-Star Options portfolio, positions we've exited, whether for a win or for a loss, any adjustments we may have made to existing positions. We have some of that to discuss today. We update stops on existing positions, and we review new positions that have been put on since we last spoke. But ladies and gentlemen, we got to address the elephant in the room. We got to address the $300 roll happening in All-Star Options. I track a All-Star Options model portfolio. And since the beginning of 2025, which is when I actually started tracking this, we've been doing All-Star Options now for 8 years-ish. I wish I started doing this sooner, but whatever. Here's where we're at. I started tracking it on January 1st of 2025, and we started with a $100,000 portfolio. And ladies and gentlemen, today, as of today, we are clearing the $300,000 level in this model portfolio. This model portfolio assumes that you risk 2% of your equity on any one All-Star Options trade. Okay. And that's dynamically adjusting. So as the portfolio has grown, positions get a little bit bigger. There's still 2% of the equity at the time you put the trade on. That's constant. But as the portfolio grows, positions get larger. That's what you want to happen. And if portfolio shrinks, positions get smaller. We did have some portfolio shrinkage earlier in the year. We had a little bit of a rise in the February, but then when the tariff tantrum hit into March and April, we had a bunch of positions that just did not perform very well. At least our long biased positions did not work very well. But off of the tariff tantrum lows, where the account was basically treading water at 100 grand, from there, in less than a year, we have tripled this account. Now, if you're an All-Star Options member and you've been a member all year, hopefully your portfolio equity curve looks something similar to this. If you've taken our trades and you've sized your trades with a similar risk metric, then your portfolio curve should look like this. If it doesn't, that's okay. That's okay. This is not meant to shame anybody who's not keeping up. And in fact, I'm sure there's some of you who have outperformed this, and great. Congratulations to you for being here, for being a part of this. I couldn't be happier to be a steward of this to you guys. And I really hope that that you are not only making money and earning profits with All-Star Options, but I hope that you're learning, becoming a more confident trader, becoming more versed in various option strategies, because we do use a lot of different option strategies in All-Star Options. We are not a one-trick pony. All right, so just wanted to get that out of the way. I know we're all excited about that. I certainly am. Let's look at the stock market. Let's see what's going on here. The S&P 500, man, it's like it felt like we hadn't had a down day in a while. We certainly had one for a while today. We're well off the lows, thankfully. But certainly a concerning candle for anyone who's long. This certainly does not mean the trend is over, but maybe we're in for a little digestion. That would be okay, right? I mean, so many stocks are in such extended moves right now, and we're in some of those, so we're benefiting from that. But man, there have been some big moves. But that's what the SPY looks like. Let's look at the Qs. Qs are very similar. Notice, by the way, in both the Qs and the SPY, that they both kind of traded right down to their 50-day moving average and bounced off it, right? That's true in SPY or Qs, and that's almost true with SPY. We came almost to it and bounced. So that's encouraging. IWM has further to fall to touch its 50-day moving average, but the strength in IWM relative to SPY and NASDAQ has been notable over the last several weeks for sure. Let's bring up a VIX chart real quick, see if VIX is signaling anything. VIX is well off the highs today. We kind of had a little momentary spike, not surprising when we were at the lows today. Momentary spike, but we've come all the way back. VIX with a 17 handle, telling me, you know, everything's all right. Everything's okay. Maybe not great. And if you're not in the right stock, I had a guy on Twitter today say to me something to the effect of, well, everything's great if you've only been in this sector and that sector and this sector. And I'm like, my response was something to the effect of, well, why wouldn't you be? Why would you be in those and anything else? Like, you want to be in the things that are working, right? Why have your capital tied up in positions that aren't working, right? And I said this on the morning show this morning, guys. If you didn't notice it, if you didn't see my appearance on the morning show, I gave kind of a PSA to everybody. I said, look, if you have a portfolio of mostly long positions on, you should be doing pretty well, at least over the last several weeks, several months. You should be doing pretty well. But if you're holding any positions that you've been in for a while and they're losing money, well, if they're not making money in this market, you got to get rid of them. All right. They're a drag on your portfolio. They're a drag on your performance. Cut bait, get out, save your energy for the things that are working and forget about the things that aren't. That's good advice for anybody. All right. Let's do this. Let's get into the positions that we have closed since we last spoke. And boy, do we have some beauties, which are directly responsible for this P&L graph that we see right here. All right. So let's start off with CM. We've talked about this one a lot. We're finally out of it. Again, it's been 2 weeks since we did the jam session. So this exited almost 2 weeks ago tomorrow. 2 weeks ago tomorrow, right? On a Friday. We held this all the way to expiration day. Doesn't happen very often, but it happens. And when it does, it's great. We were long January 75 calls we got into back in May. We paid $1.50 for them. And the plan from day one was if CM got to 85, we would sell half of our position. When it got there, we did it. Boom, held the rest. And at first, when we sold that half, we're like, oh, that looks like that might have been a good time to exit because we're having a pretty significant rollover. Well, that rollover bounced off the 50-day moving average and went higher. And the stock kind of stalled there in the mid 90s in expiration month in January, which was kind of a bummer. But hey, we got out for 1760, the second half of our position. Stock's going higher still, which, hey, can't be greedy here. We had a huge win, guys. Huge win. The average price here is I don't know. I'm doing some back of the envelope math here. It's about 1350. Let's call it 1340. So we paid $1.50 for it. Got out at 1340. That's not quite 10x, but it's pretty close. That's a big, big win. Congrats to those of you who rode this trade for us. And guys, we just stuck to the plan. We didn't do anything special here. When I bought these calls at $1.50, did I know that this thing was going to go rip and go 10x in my direction? No, I didn't know that. I had no idea. All I knew is I had a process, I had defined risk, and I was going to trail a stop going up, and I had places where I was going to take profits. I followed that plan, and the stock did the rest. That's trading. That's what successful trading looks like, ladies and gentlemen. All right, let's move on. Roku, here's one that's not successful trading. We were long a bull call spread in June. In June options, we were long the 115 calls and short the 165 calls that we paid $12.25 for. Well, we had a brief moment of thinking, oh man, here it goes right here on January 5th. I thought, oh, this is it. Here's the breakout. We were a little early, but here it comes. Well, we were quickly rolled over on us. My stop was 105. We had a close below that on January 16. We closed it the next day at 805. Not a terrible loss, right? I say this every time. I'm a broken record, but every time I put a defined risk trade on, I'm willing to lose 100% of that capital. I'm sizing my position in a way, no more than 2% of my equity. And I'm not happy, but I'm willing to lose that in just to see what the market can give me. In this case, it didn't give me anything, but I got out at 805. So significantly smaller than a 2% portfolio loss. We'll take it. Great. Continuing the bad news, OMF. We were long some May 70 calls. It looked like it was off to a great start. I think I might have even tweeted or said it in the chat room somewhere when we were having this move here. I think I said that, hey, I'm not saying this stock is going to be one of our biggest winners of the year, but this is the common thing that they do. The biggest winners all kind of take off right away. Doesn't mean it's not a guarantee it's going to work. And certainly it did not. We got stopped out. 64 was my updated stop loss level. got stopped out. But hey, got out for $1.95. I paid $2.10 to get in, so I only lost 15 cents. It's a loss, but it's barely a loss. It's a flesh wound. It's a scratch. It's a scratch. It's like the cost of commission. No big deal. So we're out of OMF. But that's it for the bad news this week, guys. The rest of it is all good news. We've covered this silver story quite a bit, so I don't want to beat a dead horse here. But here's a trade that I was dead wrong on. Dead wrong. This blue circle here was when I put this trade on. I thought for sure when we got here, the silver was overextended, that the turn was coming. It's only a matter of minutes or days until it's coming. And I put on a bearish put ratio spread where I was short the 75 puts and long 2 of the 66 puts. I put that whole spread on for $1.50 net credit, which is key because what that meant is that if I was dead wrong and the position kept going higher, both of those puts would basically go to zero or close to it, and I'll be able to cover it for less than I collected on day one. So I collected $1.50 on day one. Well, right here on January 23rd, I was able to close the whole thing for 60 cents. So I made money, even though I was dead wrong. I would have made a hell of a lot more money if this thing rolled over and fell down to say 50 bucks. But I made money and I was wrong. Happy. I'm happy to do that. That speaks to the flexibility of options, ladies and gentlemen. And I talked about it on the morning show this morning. If you're trying to fade stocks like silver or some other things that have had some big moves, parabolic moves, one strategy you may consider is put ratio spreads, where you're selling one put, buying two more or more, basically buying more puts than you're short, like more units than you're short. Play around with those, work the math in your favor, try to get a credit for them so that if you're dead wrong, you could still get paid. But if you're right and the thing craters, you could potentially set yourself up for a large win. Email me if you want more information on that. Okay, so that's it for SLV. We are out of SLV. Vale. I think I'm finally saying this one right. I was calling it Vale when I first got in. We're still in it, by the way. We got into this trade back in September. We bought long December 2026, $12 calls. So these are leaps, or at least they were leaps when I got into them. I don't know if you could still call them leaps now because we have less than a year till expiration. But we paid 75 cents for those $12 calls. Well, guess what? Like that CM trade, this thing has just trended beautifully in our direction. And I had a plan. Now, mea culpa here. I didn't follow my plan to a T. I screwed up. And somebody called me out on that in the All-Star Options chat room, and I commend you for calling me out on it. When we put this trade on, I had a plan, and that plan was when we got to $16, if we got there, that I would sell a portion of my position to pay me back my original investment, and then I would ride the rest. So what that means is I was able to sell some of my calls for $4.40. Well, all I really needed to do is maybe sell a quarter of my position to get back my original investment, and then I could hold the rest for a free ride. That's all I needed to do. But I wasn't thinking. I forgot my plan. I just kind of worked from muscle memory. And when my trading platform sounded the alert that the stock had traded above 16 bucks, I just like muscle memory just went in and entered the order to sell half of my position. And I sold half of my position for $4.40. Do I regret that? No, I don't regret that. I mean, look, I've locked in guaranteed wins now. Sure, I'll regret it if Vale, doubles from here, right? I will have left a lot of money on the table, but I'll just be really, crying in my beer at that point because it's still going to be a huge win no matter how you slice it. So I don't feel bad that I didn't directly follow my plan. For those of you who followed the plan, congrats to you for doing the right thing. Or if you sold half with me, great. Either way, we're doing well. And at least for me, I'm sitting on guaranteed profits now. I can't lose. I have some profits already in the bank, and I have until December to see how far this thing can go. Wow, we're off to a great start. But my stop now is at 1250, which seems a mile away from right now. We'll be updating this stop here pretty soon. I think maybe next week we'll update it just to see what's going on. Okay, and finally, this is the trade that caused this to happen, to cause us to roll over 300 for the first time. Rio. We exited Rio according to the plan today. The plan was when I bought these March 75 calls back in late October for 260, I looked at the research and my man Sam Gatlin put out. in the gold rush report, and he said in his report, verbatim, I'm not, this is verbatim. This is, I'm not, might not be the actual words he used, but he basically said, if we get to 96, that's as far as I think it's going to go. That's my profit target, or that's my target price. So I said, great. I like that. That's my plan too. And that was the plan that we put in the All Star Options research piece when we published this idea. Said if we get to 96, that's where we will take profits. Well, guess what, guys and girls? We opened above 96 today. We had a gap higher. We opened above 96. We hung around there for about the first 30 minutes. That's when I exited my position. I got 22.54. I'm feeling pretty good about my exit. The stock kind of crashed a little bit. I mean, it's coming back, but is that the top? I don't know. But it's not surprising to me that maybe we run into a little resistance there because my man Sam identified that level as a possible resistance level. I think some Fibonacci's may come into play there. Yeah, I'm pretty sure that's what it was. But we are out, full out of Rio for 22.50. Guys, I'm not so good at math, but $2.60 to $22.50, that's just a whisper from a 10x on a full position. That's not 10x on half a position. That's 10x on a full position. Ladies and gentlemen, when you have trades like that, that's what makes equity curves look like this. This is what we're here for. All right. Now, not all of our trades that we do have the potential for unlimited upside, right? We do lots of different trades. We do credit spreads. We do defined risk or capped upside trades. We do a lot of that when the conditions warrant or when we're trying to manage a risk responsibly. But we also have trades that have the potential for unlimited reward. And we need those trades because those trades are the trades that can make or break our year. And Rio is one of those. We are already well in the green for the year. It's only January. You gotta love it. You gotta love it. So, ladies and gentlemen, for those of you who rode this Rio trade with me, congrats to you. Congrats to sticking to the plan. Doesn't it feel good to make money when you stick to the plan? I don't know. Feels better to me. Feels really good to me. All right, let's update a couple stops. We just have 2 stops to update this week. Well, we'll throw a third in here. I put this in the chat room last week because again, we didn't have a jam session last week. But we're raising the stop in J&J to 204. Wow, Johnson & Johnson. Can you believe this run in Johnson & Johnson? Again, when I put this trade on back in August, when I bought those March 190 calls, I did not envision this kind of move. But you know what? We have to create our own luck. You got to follow the plan. You got to follow your system. You got to take the swings when you step up to the plate, when those fat pitches come, and let the market do the rest. And J&J is doing that. I mean, wow, what a run in this thing. We have till March expiration to see where this thing can go, but our 190 calls are well in the money now. Wow. But we're raising our stop now to 204. Don't want to see it come back to 204. I could probably be a little bit more aggressive and raise it up to 110, but I think for now we'll leave it at 204 and see what happens. We'll revisit again next week. All right, next up, DigitalOcean, DOCN. I always call this Dokken. Any of you older folks, metalheads back from the 90s, remember a band called Dokken? Yeah, real good metal guitarist. Good, yeah. Anyway, went off on a tangent. DOCN, we were in a May bull call spread. We're long the 55, 75, long the 55s, short the 75s. Man, I don't like the action today. That's a pretty concerning candle, but for now, the stock has earned our patience, and I'm raising my stop to 50. Don't want to see DOCN, Dokken, get below 50. Dokken. All right, lastly, Gilead. Woo, what a run we've had in Gilead over the last week and a half. Finally, it made us wait, but the wait has been worth it. We're long a bull call spread. We're long the May 130s, short the 160s. We paid $6.90 for it. We are in the money now, but we still have some work to do to get to our profit target. I'm trying to sell this thing for 24 bucks. That's ideal. Ideally, I'd like to sell this spread for 24 bucks. So for that to happen, it needs to get above 154 for me to have a chance at getting that price. So we got some work to do, but I'm raising my stop to 120. Do not want to see Gilead come back down to 120. That would be very bearish for my position and likely signal to me that my chance of making money in this trade is 0. So I will close it below 120. All right, that's all I get for updated stops for you guys. Let's bring that up, a little screenshot. I don't have the J&J because I think we talked about it last week, but You know what? I'll put it in here anyway. Oh, I can't put it in there right now. Sorry, because we're in the middle of a show. But add the J&J at 204, and then you got the Dockin and the Guild. Go ahead and take a screenshot if you need to. All right, last up, I want to talk about the new trades that we have put on in 2 weeks since we last spoke. Now, it's been 2 weeks, and I've only put on 3 new trades since we last spoke. Again, it was a travel week last week. It just was bad. It's hard for me to do trades. We had the Fed stuff yesterday. So I think there's even one day that I didn't see anything I liked. So, hey, we don't force trades here, guys. We put trades on that look good. That's it. If there's nothing that looks good, I'm not going to force it. I don't want to risk my money. I don't want to risk your money. Anyway, here's the 3 new trades we've put on since we last spoke. First one is a bullish bet in FedEx, FDX. If you want the details for these trades, you can find them at allstarcharts.com. Head to the members section, head to the options section. You will find detailed trade plans for every trade that we publish at All Star Options. That trade plan will tell you why I like this setup, how I'm playing it, what option strategy I'm using, how I'm defining risk, where I may stop out, where I may or may not take profits or adjust my position. All those details can be found at allstarcharts.com. All right, so we're long FDX. Another long trade we put on is in Array Technologies. This was a favorite, by the way, at the Portfolio Accelerator last week in Miami. A lot of the analysts really like this name. I don't know. Does that mean this is a big potential winner? Not necessarily. You know, sometimes when there's consensus and we all agree on something, then maybe that's a great fade, right? So take that with a grain of salt. But this one was discussed a lot from a lot of different angles and a lot of different viewpoints last week when we were in Miami. So, hey, let's play along and see what we can get. So we're long in Array. And then finally, this trade actually just happened about half hour before we went live with the options jam session. I put on a new trade. I put on a bearish bet in Circle, SRCL, the Circle Internet Group. Ladies and gentlemen, this is a recent IPO. It IPO'd back in June. And at where we're trading right now, we are trading below the opening price for Circle. You know what that means? We don't get to say this a lot. But what that means with Circle trading below the IPO opening day price, what that means is anybody, any investor or trader or portfolio manager, anybody who has purchased Circle shares at any price at any time since the IPO. I'm not talking about people who got pre-IPO allocations. I'm talking about people who bought the stock in the free market, in the open market. Okay. Anyone who has purchased stock and is still holding it, you're losing money right now. It doesn't matter what price you paid for it. You are losing money. And you know what, guys? If everyone's losing money, the only way to stop the bleeding is to sell the stock. Seems like a stock you want to be short, right? So I got short today. Again, the details can be found at allstaroptions.com or allstarcharts.com. Head to the options section. You will find the details, but we are definitely short Circle. I'm in it to win it. Let's go. All right. That's all I have for you, ladies and gentlemen. That's all I got for you. If you have any questions about anything we discussed today, about the P&L graph, about the performance of the model portfolio, about how we manage trades, if you have questions about any trades that I have on or anything we discussed here today, shoot me an email. It's right there at the bottom, info@allstarcharts.com or Sean@allstarcharts.com. Shoot me an email. I will be happy to address your concerns. And if you are not a subscriber to All Star Options, I guess you just don't like winning. I guess you just don't like this kind of performance, right? Get involved. There's the link right there. It's also in the chat. You can find it up there. stockmarkettv.com/get All Star Options. I also have a free options newsletter. I write several times a week, not every day, but several times a week. Options education, things that you can learn. I share my anecdotes. I share things I've observed. I've been trading for 27 years. I've seen a few things, some good, some bad, some indifferent. You might not always agree with my take, but I think you'll be entertained, if nothing else. So subscribe to the free options newsletter. Link is right there. Would love to have you in there. All right, ladies and gentlemen, that's all I got for you. Have a great rest of your week. Congrats on the $300 roll, or however that roll looks in your portfolio. Congrats. You should be at all-time highs with us, at least. So congrats on that. Keep going. You're becoming a better trader every day. I know it. I can feel it. Good for you. All right. Have a great weekend. See you next time.